Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 23rd of January, comes to you from London. And markets were down last night. Stock markets really falling globally. Just increased concerns about global growth, and so we are just seeing that filtering through. The dollar continuing to look strong. It's flat over the last couple of days. We've still got downside targets hanging over us, but still the bullish index there. That's the dollar index, so against the basket of currencies. Euro looking weaker against the dollar. We're seeing here bearish on the long-term chart, bearish in the medium term, and bearish in the short term with downside targets activated. The yen, we're seeing the dollar holding its strength there, and on the short-term chart, medium term still bearish. Sterling actually looking a bit more bullish against the dollar on the short term. We're at the 130 level this morning, but still has work to do to get through the cloud on the medium and long-term chart. The sterling chart against the euro is saying sterling stronger here as well. So euro weakness really quite key. And against the Swiss franc, we're seeing sterling just managing to climb back to that 129 level. Against the Aussie dollar, sterling also looking stronger as well. So sterling actually holding pretty strong short-term trends there, despite all the Brexit woes. Bitcoin continues to struggle, bearish on all three time frames. The S&P 500 index we see here was down yesterday, down 1.4%. So still looking worrying on the chart. We just can't get back into bullish territory. We need to break that December high. That's about 22,800. So we've got quite a lot to go yet before we're through that. We do have upside targets, not above that 2,800. In fact, we've got one here that's not activated that would take us there. And we do still have downside targets hanging over us. So too early to call a recovery. Nasdaq was down as well, and the Dow down 1.2%. So again, we're seeing quite a struggle there. The broader-based Russell 2000 index also off last night. So we are just seeing potential for the lagging line finding resistance on the cloud from below and then falling away further. So markets by no means out of the woods. The future's down very slightly this morning. The S&P future down 0.7%. The Nasdaq E-mini down by the same amount. Looking short-term bearish on the clouds here. The FTSE 100 index down 0.6%, turning bearish short term, lagging line moving back below the cloud, downside target of 4%. So we are just seeing markets rolling over. FTSE 250 down 0.6% as well, not quite as bearish, and the DAX down 0.7%. So we are just seeing again a sell-off across Europe. CAC Quarante down 0.5%, and Japan was down 0.5% as well. Hang Seng and China holding on to just be up very slightly, but still bearish trends on those long-term. China's still a big worry. The Sensex down 0.16%, and the Aussie market down slightly as well. Brent crude fell back yesterday, back below the $62 level, but has recovered a bit this morning. We're up 0.4% this morning. As I mentioned before, this is the strong quarter for Brent, so we wouldn't be surprised to see this rise to continue. We are just looking to transition here to short-term bearish, so need to keep an eye on that. WTI actually holding its bull trend more clearly. US nat gas sitting at $3.14, so it's really come back to short-term bearish, struggling to hold on to those gains that we saw of late. Gold sitting at 12.85. Still in a short-term downtrend, but looking like it might make a transition. And silver also still short-term bearish. US 10-year yields sitting at 2.73%. This data all coming from Thomson Reuters Icon, or if you're running as a private user, Metastock Zenith, the same system, really powerful. Weekly, daily, 60-minute, that's my long-term, my medium-term, my short-term view. Taking a look at the individual stocks. Here I'm using Yahoo. So this is Yahoo Finance data. My weekly by 1%, my daily by 0.5%. Daily with on-balance volume and a relative to the Dow Jones Index normalized, so I can actually see the percentage over the last 12 months. We start by looking at the Nasdaq. Pretty big falls here last night. We did have a handful of stocks up. eBay actually bucking the trend up 6%. And turning a corner there, so that might be a recovery situation. We're seeing the relative turning as well. The on-balance volume not quite showing as strongly as the price, so it's not quite as well volume led. Looking at the other side of the coin, we had some pretty big stocks, Chinese ones, JD.com, Baidu, down 6%. So we're seeing the China slowdown having a real impact there. We saw Amazon down 3.7%. So really quite big falls there. Google, Alphabet down 2.5%. Apple down 2.2%. So we are still seeing some pretty big falls in tech. The Aussie market, we have got Saracen Mineral Holdings up there, we're up 4.8%, and on the other side of the coin, we've got Challenger down 17%, so really falling away there. So some terrible falls still happening in some stocks in the market. China, we see it was pretty mixed picture. Some risers, some fallers, which is why we're flat. The same for Hong Kong. We can just click on the list there and see the same. And the Nifty 50, also we can see here, we had Yes Bank recovering some more after last year's catastrophic failures, up 3%. Sun Pharmaceuticals up 3%, but in a downtrend. Z Entertainment still struggling as well. On the worst performers, we had Grassam down 1.65%. Indiable Housing, they feature in the leaders and laggards list quite a lot, looking similar to Yes. The Nikkei 250, again, it was mostly fallers. SoftBank actually they're up 2.4%, so they're looking a little bit better, but still bearish on the chart. And if we look at JXT Holdings, down 3.45%, so that was a factor as well. Looking at Yahoo, Yahoo Finance in Europe. Here we see the prices coming in. The FTSE 100 this morning is down, as we mentioned. We've got Everaz up on the leaderboard. Sainsbury's, Tesco's. We're seeing supermarkets. They had a good day yesterday and up further again today. Ocado Group. So we are just seeing that. Even Morrison's in that list. Marks and Spencer's. So we're seeing food retailers looking quite good there. On the downside, the worst performers today: Smith's Group, Ferguson, and Fresnillo. We're seeing some signs of some recoveries in these stocks. You just have to look hard. Also noticing some of the banks still bearish. Lloyd's Bank just there, down 0.63% in line with the market, struggling to get through. Taking a look at the 250, we've got Computer Center up 5%, so they're looking a little bit better. Still bearish on that medium-term chart, but might be finding some support on the long-term chart. Having really outperformed the market last year, it gave up all that performance, so it was a real cycle for Computer Center. RPC Group up 4.8%, looking a little bit better on the chart as well. The relative has been in the doldrums though. On the downside in the FTSE 250, we've got Metro Bank. Bank's really been Metro Bank down a massive 26% this morning, so it must be quite a big story there, but that's a really big fall. And we're seeing still quite a few stocks down 8.42%. So we are still seeing that driving market. Still, we're seeing bigger falls across the board. Looking at the Euro Stock 600, we've got Carrefour. So supermarkets having a good day, up 4.7%. IG were down terribly yesterday. They're recovering some of that today, up 4%. A lot of volatility kicking in there. Even W. Smith's up 1.7%. And here we see the real-time prices coming in from Yahoo. I have my system set to pull the prices every 1 minute, so it means that all the charts are up to date. Looking at Metro Bank, that's really massive, that fall. So that's showing in the Euro Stock 600. G4S down 4.5%. Their woes still continuing, bearish on all three time frames. So we are seeing still some pretty big falls. That's it for today. Until tomorrow, happy charting. See you then.